Hello and welcome to the Alt Asset Allocation Podcast. Today's interview is with Shayne Mullen from BlockFi. So BlockFi is redefining banking, and for retailers, it offers four main business pillars: interest account, trading, crypto loans, crypto-backed loans, and a credit card. So being paid to hodl or to hold your crypto, not selling your crypto, and accessing those dollars to make a purchase at very low rates, I might add. So in this interview, we dive into the business model and really touch on a lot of the details, especially the potential risks. So how can you give somebody your Bitcoin, not your keys, not your Bitcoin, and be paid a little interest to do so? But going through the details on how the business operates and some of the things to look out for. So I've been a happy BlockFi customer for actually quite a long time now, and I've dropped in a referral code that you can use to get up to $200 after you deposit. So BlockFi is really interesting and has some great offerings, and I definitely wouldn't recommend it if I wasn't using it myself and didn't think that it was a very good opportunity. And it's really a great opportunity for folks trying to get a little bit more yield or do a little bit more with their crypto. Before we jump into the episode, I wanted to take a second to thank you for all the great questions and feedback I've been getting. You guys really rock. And if you're getting some value from this podcast, please drop me a line or a review. These things really, really help. All right, here we go. Enjoy the episode with Shayne Mullen of BlockFi. Shayne, welcome to the show. Happy to have you on today.
Yeah, thanks for having me.
Yeah, I'm excited. Before we got started, I'm out here in LA freezing my butt off in a sweater, and you're walking around in shorts. So you made me really jealous. But
Yeah.
yeah, there's a lot happening in the crypto market right now. This is being recorded on the 24th of February, and everything's kind of going wild and super fun, but we'll stay away from all of that. And the topic today is jumping into BlockFi, what it is you guys do, and letting my listeners know a bit more about your business. So I'd like to
Sure.
kick it off, just a little bit about you, your background, and how you got started with BlockFi.
Yeah, 100%. So I started my career in, the early days of what I would consider kind of the financial technology, ecosystem boom. I graduated college, always wanted to be kind of on the convergence of finance and tech. I thought it was going to be the future. I thankfully was, my thesis was accurate. And so the best place back in, 2012 when I graduated was Bloomberg. They are the biggest, still are probably the biggest financial technology company out there. Most people don't think about it like that because they don't think Bloomberg, but multi-billion, 30, 40, $50 billion privately held company. They power most financial markets on the institutional side. And so I started my career there, really understood like every asset class kind of in and out. Right. And from there, I took a bit of a niche dive into mortgages and more specifically mortgage MBS. I did a bunch of work there for about 3 years on selling trading systems to effective hedge funds who were buying MBS, a little bit of consumer ABS as well. And then ended up finding, my passion for large companies was kind of taken back when this whole kind of venture investment into the fintech space started happening really predominantly in like 2013, 2014. Shortly after that, my work at Bloomberg, I found a startup in New York, which was in the marketplace lending space. So at the time, the biggest, I would say, kind of evolution of fintech was these companies taking these traditional banking products, right, and then moving them online, creating a capital stack or technology stack that effectively reduces time to get the actual product into your hands and reduces cost, right? So one of the big ones was lending, consumer lending. Right. So back in the day, you'd have to go to a bank, sit down, talk to your banker, give them a bunch of paperwork, bring a bunch of files with you. They'd originate your loan, and you get the money in 30 days. Right. Well, Lending Club, Prosper, Avant, Funding Circle, all these companies emerged and were like, we can do this online, and we can match you, the borrower, with retail who wants to earn yield on the actual on the loan. Really cool concept. So the first startup that I joined was called Orchard, and that was venture-backed startup. Canaan a few other like really big names. And my boss, VP of sales, was Zach Prince, who is the CEO of BlockFi. So Zach and I started at Orchard. We ended up building a business that allowed institutional investors to actively buy loans on Lending Club, Prosper, Funding Circle, and some of these other platforms to create these consumer portfolios and earn significantly more yield than they could anywhere else in the consumer space. That business grew pretty rapidly. The whole industry grew like crazy fast, for better or for worse back then. I think you see some of the stock prices now, and some of those businesses did not turn out too hot, but we were smack dab in the middle of it, right? We were seeing all different types of lenders. We were seeing all different types of institutions. We got a real good flavor for different investing preferences, different issuing or originating preferences on the lending side. And we really built this marketplace, which was awesome. That was like my kickstart into like, whoa, like fintech is here to stay. The picks and shovels kind of infrastructure businesses are actually really important for this world to succeed. And with that, we ended up, selling the company in 2018. And then I moved out to San Francisco. And when I moved to San Francisco, I was like super interested in payments. That was my next thing. I'm like, lending is great. Payments is kind of the next kind of iteration. Stripe was just getting off the ground for the most part. And I'm like thinking to myself, all right, what part of payments are unique and what part of payments, can be effectively disrupted with different technology and different systems? I found myself at a company called Quill, which is effectively a payments platform for contractors, right? If businesses want to play contractors anywhere in the world, easy onboard, pay the contractor, and then the contractor has the ability to take an early payment. It was like a cash advance product on the back end. Pretty sweet. We actually grew the company pretty quickly, had a bunch of big clients. TriNet was one of our biggest clients. But at the time I'm there and I'm thinking, well, this like blockchain has to have some form, right, of positivity in terms of making this process more efficient. It's like, I'm still sending wires through an API call to my bank. I'm still like sending ACHs, which land in like 5 days, depending on where you send them. International FX could be 9 days and like 10% fees. Like that to me was like, it was just outrageous based on kind of some of the evolution I saw in my previous role with lending. And so, I started looking into Ripple, started looking into some other like distributed ledger technologies, Corda. And Stellar was like one of our partners at Quill at the time, because we were thinking about building some of this stuff as I was exploring. And that's like more or less kind of what got me the most hooked into the blockchain ecosystem, was this concept that you could send money international almost in real time for a fraction of the cost. And that to me was going to change the way that like the world worked in the future. 100%, right? That was 100%. Like light bulb. I'm like, that's changed the world works. And I've always been very like stable coin / like the, tokenization of like the Ripple and XRP. Like those are going to be things that help with transactions. Those are the currencies. And then I started to get more into Bitcoin, Ethereum, et cetera. And I was like, those are the assets that are going to help power some of these things as well, right? Those are assets that are not going to transform necessarily maybe payments, but they're going to transform the way that people store value and the way that people earn and appreciate their wealth over time. So I got into Bitcoin, Ethereum, Coinbase, like the whole 9 yards.
Oh, yeah.
I was actually just looking at my Coinbase tax form because I was just like curious when I first bought. I think I bought Ethereum like 2016 or something like that, and I didn't know what it was. I had no idea. I was like, or maybe like early 2017. Couldn't take a plunge, couldn't get comfortable, but like was in it. And whenever you buy something, in my opinion, I research the heck out of it. I want to know what it is. And so fast forward, this kind of evolution of my fintech background to last year, Zach, had called me and talked to me about kind of what he was building. And we had been in discussions about BlockFi a lot, actually, from the beginning of kind of his evolution of the business model to where they were at last year. And, our two worlds collided, and I joined the company back in July of last year.
That's awesome. Actually, little known fact is one of the first kind of fintech startups I tried in Thailand when I was living there was a P2P peer-to-peer loan marketplace as well. So I was very much in the thick of that whole revolution. I mean, I love the idea. Not sure how to build like a successful business model out of it. They think they're
Yeah, I
credit
think what
risks,
ended up
but
happening, the model like sounds great, right? You connect retail customers with access to yield opportunities they wouldn't have otherwise. But when you start to work in the retail landscape, you've got a securities and regulation that you have to follow because it's very important to do so, especially when you're dealing with retail investors. But B, you have like a scale problem, right? So like if you're lending club and you're a marketplace and you only make money on origination fees, meaning you only make money when loans are issued, right? Well, then the way that you make the most money and the way you make a lot of revenue is you get more loans issued on the
got to
platform.
issue a
Well,
lot of them. Yeah.
if you need to issue a lot of loans, guess what? You need a lot of capital to issue the loans. So what Lending Club started to do is, hey, Ares, hey, Fortress, hey, Bank of America, like, why don't you guys just sign $200 million forward flow agreements with us? And that will, facilitate the next 6 months of our kind of revenue growth targets. And then let's just keep adding institutional investors. And then eventually they were like, now we have 6 facilities that are each, 500 million each. And the retail guy's like, what the hell? Like now I
Oh,
can't
yeah.
participate like I used to be able to. And that's what happened in that industry. It effectively just kind of started to disrupt and change kind of the way that, retail investors had access to capital. And then, as institutions came in, it kind of compressed that,
Yeah.
that demand or that
Well,
ability to,
still good in theory, and hopefully they'll be worked out. But today, all about BlockFi. So, um, BlockFi. I mean, we were talking a bit about it, and I've been a fan for a while. Recommend it to a lot of friends. But I'd be curious how you describe BlockFi to a non-crypto person. Like, what's your one-liner or elevator speech for it?
yeah. The best way I describe it to non-crypto person, I say we're a wealth management platform for crypto assets, right? We allow you to manage your assets, crypto assets, and garner wealth from it over time.
Easy
So
enough.
when you think of like a wealth manager, like what does a wealth manager do, right? A wealth manager gives you access to yield. A wealth manager gives you access to financial products, right? And a wealth manager is safe, secure, and you would assume trustworthy, right? Some wealth managers out there, depends on who you're talking to, but those are the things that I think about, right? So why should somebody that owns cryptocurrency not have access to that network, right? If I own Bitcoin, I can't go to UBS and open an account and be like, hey guys, can you manage, my Bitcoin for me? Oh, and I'm looking to borrow off the Bitcoin too. Oh, and I'd love to invest it in, or get paid yield on it. Oh, I'd also like to buy something else with it, or, et cetera. So that I would say at the end of the day is like our core, right? Core infrastructure play for retail investors.
That makes a lot of sense. So, I mean, you have a couple like divisions, I guess, or focuses of BlockFi, but just walk me through each of those divisions and kind of then we'll dive into how it works in a little bit more detail.
Sure. Yeah. So, I mean, the business, the best way to kind of think about it holistically from like a 10,000-foot view is we've got a retail business and an institutional business, right? The retail business is, we've got about 200-ish thousand clients today in the retail business all over the world. And we offer kind of, I'll call it 4 pillars, right, of value to help manage your wealth. The first I mentioned earlier, which is what we call our BlockFi interest account, flagship product. It is widely accepted. People love it. I love it personally. I'm sure you do too, as
I
a,
love it too. Yes.
as a customer. But we allow you as a retail user to deposit your crypto and earn yield up to 8.6%. We pay 8.6 on stable, 6% Bitcoin, 5.25 on Ethereum, and the list goes on. We also offer, which is not as like publicly mentioned in our kind of advertising, but will be in the future, but the second pillar, which is trading. So buying and selling. And we only, we charge a lot less than the Coinbase or Geminis of the world. Like we don't have a transaction fee. We just build a little bit of cushion into the spread of whatever the price is that you buy. So that's second. The third is the retail-based lending product. So what is that? That means that if you deposit crypto onto BlockFi and you're earning interest and you want to access liquidity off the position of your crypto collateral or crypto in your account, you can pledge some of that crypto to BlockFi as collateral and we'll issue you a cash loan at 35 or 50% LTV, meaning that if you have $10,000 in Bitcoin, right, and you want a loan in USD off that Bitcoin, we'll give you a $5,000 loan, right? 50% LTV. It's half of what your Bitcoin's worth. Typically charge like 8%, 9%, give or take annual. It's an interest-only loan as well. And a lot of our customers use it for, they don't want to sell because they don't want to lose the appreciation of their crypto. Maybe they've got like some sort of other investment or thing that they want to use the cash for. And from a tax perspective, right? Like you can draw down off this and not have to worry about the cap gains of selling your actual crypto assets in this particular instance. So another pillar, great product. It was actually the first thing we ever came out with, which kind of spearheaded the growth. And then lastly is the credit card. So that's pillar number 4. Credit card is a retail-based product in the US only for today. The same exact concept of your Chase Freedom or American Express card. You apply, you get a limit. The beauty of it is that rather than getting cash back or travel rewards back, which nobody really uses today, you get Bitcoin back, 1.5% back in Bitcoin. So that is going live in Q2. Super excited about that product.
I'm definitely one of the first signups. I think super excited about that as well. So interest account, deposit crypto, earn yield. Important to note that that yield can be designated in any sort of currency. So you deposit Bitcoin, you're paid yield 6.2% APY in Bitcoin, but I could also have that in dollars. I could have that in Litecoin or PAX Gold, whatever I would like, which is a cool little function as well. So that's the first one. Trading, buying and selling crypto, no fees. You build it into the price. Retail-based lending, crypto-backed loans, 30 to 50% LTV. And this gives you US dollars direct to your bank account really freaking fast and reasonable rates for that speed and ability. And then the last pillar is the credit card, which is an actual credit card, not a debit card, paying you interest or rewards in Bitcoin. So super stoked. Yep. Q2, definitely marking my calendar. So that is the retail. And you said there are 200,000 retail users. Can you jump into the institutional side of the business as well?
Yeah, for sure. So on the institutional side, we cater to top financial institutions in the world who are looking to do a few things. One is borrow. So borrow crypto in some capacity or borrow USD. The other is trade. So we have an OTC over-the-counter trading desk. So if you as a corporation or as an institution want to come in and purchase crypto on our platform through our OTC desk, we're hooked into all the major exchanges and trading desks to get best price execution. And then the last is we just launched last week, or it might have been like 10 days ago, a Bitcoin trust. It's called the BlockFi Bitcoin Trust. Very similar structure to Grayscale Bitcoin Trust. Ours is custody with Fidelity. The fees are a little bit less. And we're seeing a lot of really interested parties come into that particular product.
Awesome. And then in terms of size of the business, are you able to share like what percentage of the total business, profit, revenue, whatever your metric is, retail versus institutional?
I think today it's more 60-40 institutional revenue versus retail, but we have $14 billion worth of assets on the platform right now. And we've got, 200-ish institutional clients, 200,000-ish retail. We're doing, 9 figures and more of revenue per month. And what's nice about our model is that we're not succumbed to just one revenue stream based on one product, right? We started the business with this construct where let's take a niche, potential. Well, the business evolution obviously is a long story, but kind of more organically, let's start with this kind of niche customer base, which is the crypto investor, and let's build one product really, really good for that particular type of niche customer. That product was the retail loan product, right? From there, once you get really good at that, that's when you can then start to add additional products on, right, to your suite of tools, trading, yield, credit cards, trusts, et cetera. And then all of a sudden you see multiple different revenue streams. And if, for whatever reason, a revenue stream, took a hit or had a down, it doesn't matter because we have so many of these revenue streams available today that are all doing somewhat relative of a similar number. It's a really exciting thing to see, right? Because it makes you a lot more confident as a leader of a business in the position that I'm in to, help make decisions to scale in certain areas.
Yeah, absolutely. No, and I think these they're solving a real need. I mean, the kind of making these massive purchases a non-tax event and not able to touch your Bitcoin stack. I think that alone, you kind of, when I explain this to people, you kind of see the light bulb moment that they're like, oh, well, I am incredibly bullish on Bitcoin and I don't want to sell it, but I do want to unlock that cash. It's like, yeah, it's very similar to a HELOC, like using your home as collateral. It's the same sort of thing. So yeah, I think that makes a lot of sense. So a lot of the discussion I have with investor friends, it's you look at this and you say, okay, I give you my Bitcoin, you pay me 6% interest monthly. You know, how is this interest generated? I know how banks work, but like perhaps walk me through like the business model of where is this interest being generated? Yeah, just paint me that picture a little bit.
Yeah, for sure. So, let's use like the hypothetical example that you deposit 1 Bitcoin, right, on a BlockFi. First and foremost, we use a suite of custodians, so Gemini, Fidelity, and BitGo to store that particular asset. It's commingled, right, with a handful of call it you know uh, just like a commingled Bitcoin account within that whichever custody platform we're using. And then what is typically happening is we have, on the institutional side, call it tier 1A, tier 1 institutions who are borrowing in either USD for certain reasons, which we can talk about, borrowing in Bitcoin for certain reasons that we can talk about as well, and then over collateralizing each position, right, either in cash or in cash equivalents, or over collateralizing in Bitcoin or in Ethereum if they're borrowing USD. So what that does is that allows us to earn a specific yield from that counterparty, right, that we can then pass on to our retail investors and cover ourselves and our investors on a risk perspective by, enabling certain practices that allow us to make sure that if anything happens from a financial risk perspective, i.e. the price of Bitcoin or price of digital asset goes up or down, we can make sure that, everything clears in an effective way.
So essentially, the retail person is lending their Bitcoin to these institutional parties who then are over collateralizing that position in cash, crypto, or cash equivalents, right?
Correct.
Okay. And then so that makes sense. So trying to think through um the different pieces of the puzzle here. Me as a retail person, it makes sense for me to put money, put my crypto in here. I'm earning a yield, but on the reverse side, uh, tell me a little bit more about the type of institution, why somebody would be borrowing crypto and paying, presumably above 6% to borrow that Bitcoin. Do you have any insight in what they're doing? Because they're effectively, short that Bitcoin position. Just what does that look like? Paint a little bit more context on the institutional borrower of crypto.
Yeah, for sure. So on the Bitcoin side, there's kind of two use cases that we see the most. The first, and like the call it credit profile of the institution or the counterparty is also kind of like bucketed into two different areas. The first kind of call it Bitcoin related borrowing activity is, making markets. So you have this world that we live in where there are dozens and dozens of exchanges that are dislocated that do not have the same price on either exchange. We have companies like, large kind of prop trading market making firms who are, buying and selling in real time on these platforms and making spreads. So say on one exchange, your Bitcoin is trading at 48,000, on another it's trading at 48.7. They're effectively initiating a trade at the same time, and they're making that $700 spread. Now, what's important to know about market making is that you have to have actual collateral on these exchanges to actually make the position or make the purchase, right? In the equities market, you can borrow, right? You can borrow securities, and then you can use those securities that you borrow and actually make markets. In the crypto landscape, you actually have to have that Bitcoin on the platform itself, right? So if the case is that you are entering into a buy sell and you need Bitcoin on each platform, well, you have a working capital demand there, right? There's working capital, i.e. crypto, that you need in those balances to actually make those markets. Therefore, you can either go out and buy them directly and hold them yourself, or you can come to a place like BlockFi and borrow and pay the fee that we charge on, X number, whatever the term of the contract is. And the idea is that your spread that you're making on the trading is much higher, which it is in almost every scenario. So that's kind of one. So that's one, market making. The other is Grayscale, and some of the and just the public trust Grayscale that exists today within the Bitcoin space. So when you subscribe to the Grayscale trust at NAV, you earn shares, and you need Bitcoin, right, to subscribe. You have to physically put Bitcoin into the trust to subscribe shares at NAV. A lot of companies are saying, well, if I can borrow crypto or Bitcoin at a specific price or a specific rate, the premium of my shares when redeemed at NAV to where they will be in 6 months' time is going to be higher than whatever the interest rate I'm paying. Therefore, I can borrow the Bitcoin, use it, and then earn the premium on the trade. So you're making this inherent spread on that trade as well. So those are two examples in which we're lending Bitcoin or crypto. And the types of institutions, right, are, we kind of have two buckets. One is tier 1A publicly traded prop tech firms who have literally been doing this for years, financials, credit underwriting. They've got, history. We've done business with them before. In some scenarios, those will require over collateralization, and some not, because our credit underwriting is so strict and we see enough information for us to get comfortable that they're not going to have, or the risk that associated with that particular transaction is lower. That's one. The other bucket is like most of our businesses and what we were talking about earlier is for that particular company to borrow crypto, they're going to have to post cash collateral, over collateralized, and or cash equivalent. Could be shares in Grayscale, could be cash, could be some other form of equity type cash equivalent, but it needs to be over collateralized. And so that's how we help, from a downside risk perspective, protect kind of where, our yields shake out if any sort of price risk were to happen on any of the currencies we support.
No, that totally makes sense. I never thought about that grayscale swap trade. I mean, I bet that's massive for this because the premium is well north of 20%. So whatever you're paying to borrow the Bitcoin to do this is probably a rounding error in that spread until the spread decompresses, which is kind of odd that you guys have launched your own Bitcoin trust, because then presumably that would kind of lower the spread of the Grayscale one, or at least allow your customers to stay within your own ecosystem doing that spread arbitrage, I suppose. But I'm curious, like just thinking through these market makers, I mean, if they're borrowing Bitcoin, but it's to fulfill a working capital need, but they're over collateralized to borrow this Bitcoin. Is it just because, they have a bunch of ETH and they need Bitcoin, so they use the ETH as collateral? That would be the first question. And then the second question is more just going into more detail on credit risk analysis of these borrowers, because, it seems like to be able to pay that high of interest rate, you're probably going pretty far out on the risk spectrum. So making sure that you have proper credit risk analysis, pretty key to this business, I would suppose.
Yeah, 100%. Look, I think like first and foremost, the crypto space from a banking and financing perspective in general is super nascent. You cannot, as an exchange, go to, Bank of America or JP Morgan and get, a huge facility or line of credit or even allow them to bank you. Like it is very, very nascent. And therefore there is room for, right, whenever you're in a nascent market, there's room for, price discovery that makes sense from a cost perspective, i.e. like some of the prices that we have in the market. So that's kind of one, right? We're very early. The second piece is, we on our Bitcoin lending, it's all cash collateralized, right? So we're not kind of mix and matching or things of that nature. It's either cash or cash
Gotcha.
equivalent. I think that's like good to, you're not like posting
Definitely.
Ethereum and buying Bitcoin. Yeah.
And this was the worry, right? That they're borrowing
Yeah.
from someplace and DeFi collateralizing it with that, and they have smart contract risk
No,
over
yeah,
here.
there's
And
none
the
of
whole
that.
thing's like a smoke and mirrors. But the other, I mean, cash equivalent is a very, very broad category, right? Like, I mean, so what do you mean when
It'd
you say
really just be
cash
like
equivalent?
cash or equity.
Okay.
Yeah. Or shares, if, depending on what we're talking about. And then, like, if we're thinking about it conversely, right? Like, we also do a tremendous amount of USD lending collateralized by crypto, right? So that one is a little bit more self-explanatory, where you deposit your crypto, you need working in capital USD. Maybe you're a mining company, you want to buy more mining operations, or maybe you want to, borrow USD for basis trading or whatever it may be. There are like very strict kind of margin call and release requirements that we have within that side of the house too, right? Which we can talk about in a bit. But that being said, from what I was going to jump into on kind of the credit risk side of things, because it's really important, is, our chief risk officer, Renee, he comes from Bank of America, and he built the, equity structured finance group there, and ran it for a very long time. What they did was effectively create margin or lending off of securities lending collateralized by equity positions, private placement, whatever it may be. So his background is very similar to the world that we live in. The beauty of the world that we live in, though, is that unlike securities, which settle T+2 or T+3, depending on where you are, and only are, they're geographically kind of constrained to the areas that you live. Bitcoin trades and settles 24/7, 365 days a year in real time, right? So that like adds a enhanced, decreased risk of settlement, right? Which is huge. From a counterparty perspective, like the conservativeness of our underwriting is pretty strong. Like it's pretty high. Every single company that comes through the door, no matter what, has to go through a rigorous process. We have a loan officer, or not a loan officer, but a credit officer is what we call it, for every single counterparty that comes on, where they're doing the underwriting, looking at things like financials, balance sheet, looking at what assets they currently have, looking at things of that nature, and then looking at that updated, right, for the life of the loan, which is, I think, really important. Even if something's over collateralized, let's say, even if you're putting, you have 50 million of Bitcoin held at BlockFi, you've got a $25 million loan, 50 LTV. If that Bitcoin drops, we're going to ask this counterparty to like fill up more collateral. That's one.
Send us more Bitcoin or we're taking it.
Seriously.
Yeah.
No, send us more Bitcoin or we're going to have to liquidate, right? So that's an easy piece. But even though we have that security, we're still going the extra mile and going deeper into the actual financials, or we're not signing term sheets or even sharing any information.
Yeah, and that makes sense. So I mean, these borrowers. So if I deposit US dollars, it's converted to GUSD or USDC, and that is earning 8.6%. So I mean, for me, when I talk to people, it's like, how much are you earning in your bank account? Okay, well, this is not a bank account. It's not FDIC insured, or all of the, asterisks that I love to throw in it. It's a startup. It's not publicly traded, yada, yada, yada. It would make you probably sad at how often I say these things, but, it's necessary. There is a risk. But that means somebody is borrowing those dollars at a higher rate, because presumably you're making a little spread. Or are any of these interest accounts that you're paying out, are they loss leaders, and you're kind of just eating that spread and making it up somewhere else, and using that as a way to entice more retailers to deposit their assets so you can keep this lending thing going?
Yeah, it's a good question. I think, look, at the end of the day, like, we operate our business and our kind of net interest margin, right, at a positive. So that's an important thing to keep in mind. 8.6% is high, and it's high anywhere. And I think part of the reason why we're in the market for 8.6 A is like add tremendous value, but B, like adoption, because 8.6% is a very good number. We are still making money on 8.6%. We're still right doing well. That being said, in over time, right, as you see more entrants coming into the space, as I mentioned earlier, other like finance providers can come into the space and get comfortable with crypto. Yeah, there may be a world where rates on the borrowing side start to compress a little bit. If that's the case, then rates will still compress a little bit more. We always joke like, wonder if we, if we priced our stablecoin deposits at 4% APY, would that be better than 8.6? Because people would be like, oh, this makes a little bit more sense. Like, I don't, it's not that abstract outlier. So look, I think we have a lot of room to kind of grow that side of the business. There's things that will happen macro related that will allow, force us to maybe compress at some point in the future, but I really don't see it happening anytime soon. And we're again, like first out of the first inning, right, of this space from a kind of like an infrastructure level that, we see a lot of runway still.
No, I mean, I'm a big fan of all of your products, so don't take these questions the wrong way. And
No, of course.
another interesting one that I didn't see until actually a couple months ago is that you have PAXG, so PAX Gold, which is a tokenized version of gold, but you're actually paying like 4.5% on it. So me as a value investor, took me forever to get over this whole store value investment thesis. Like, I'll put some of my net worth in gold, and Bitcoin maybe makes sense as well. Well, you guys just flip that on its head by like, yeah, you can hold gold and actually we'll pay a little bit of interest on it, like a dividend sort of thing. So it upsets that one. So I mean, people are borrowing PAX Gold on the other side of things as well.
Yeah, we do have some institutions borrowing PAX Gold. It's interesting, the tokenization of kind of hard assets, I think, is going to continue to be a trend we'll see, right, in going forward. We've been like, this is not something that we're doing today, but like we've had a lot of conversations exploring like allowing, tokenization of art or tokenization of, real estate or commercial or things of that nature. I think you're seeing obviously PAX G, there's demand in the market. Therefore, like we're able to pay a good yield on it. I think people are starting to find a lot of value at a PAX Gold because you've got a lot of these gold bugs that are thinking to themselves, well, I can actually have the same allocation, settles faster, and I get paid interest on it. That's pretty cool.
It's like a Trojan horse for
It's
crypto, right?
exactly. It's like the gold PAX G plus the credit card is like this like massive, like bigger adoption conversation, right? Where there's very real bridges, right, from the traditional world into the crypto world. And I think that's really important, like for what BlockFi is doing and like what kind of our ethos is on a kind of a go forward basis. It's like, what avenues can we build bridges into traditional markets where people can understand that the value that they're getting out of the crypto form of that particular product is the same value, if not way better and cheaper, or in our case, you're making more money than the traditional route. That's kind of like, that's an ethos I think we're going to see for, as long as we're around and we're killing it. And, with every product that we come out with, there's an element of, how do we kind of create that bridge?
Awesome. So I think we went into quite a bit of detail about the interest account. So from the retail side, it's me putting in crypto, earning interest in the crypto or coin of my choice. And on the opposite side, it's the institutional borrowing that's able to pay that yield. So the next one that I'd like to jump on, I mean, trading, it's a great product, but I don't really want to cover that too much here, would be kind of your flagship or the initial first product, the retail-based lending product. So we talked a bit about this, but I'd be curious to hear more about the types of use cases that you've seen, the most common type of use case, and where you see this product going in the future.
Yeah. So the lending product is interesting because what it does, it gives you a couple different advantages than, kind of traditional unsecured lending. A is you've got collateral and it's all secured, right? Therefore, the rates that you're going to be paying on that particular loan are going to be a lot lower. So if you think of like traditional consumer or unsecured markets where you're not securing, you're paying like 20, like maybe like 15 to like 20% APRs. Some states you pay up to 36% and higher, depending on kind of your credit profile. If your credit profile is not great, but you have crypto, you can actually still get meaningful rates because it's fully collateralized, which is really important to understand. I think the other is that like use cases are kind of pretty all over the place in terms of how people use the product today. The product is built in an interest-only capacity. So it's a 12-month product where you pay interest only for the first 11 months, and then that 12th month you pay back the remaining principal. I have seen people use it for investment properties. I've seen people use it for down payments and things of that nature. I've seen some folks use it to buy more crypto, although I don't like encourage that personally. I've seen it for just general kind of like debt refinance, right? Let's say you have like 5 credit cards and, $10,000 balance and the fees on those credit cards is 25%. You can refi, right? Or, consolidate and use this loan to do that. So I think there's a lot of really cool use cases. And it's funny, I see different use cases kind of every day when I talk to current clients. Where do we go, right, with this product? I think is a few different directions, but one is like creating a different loan product backed or secured by your crypto collateral, right? So right now you have this interest only construct, with for some people works, but for some people like, wait, I got to pay this whole balloon back, at the 12 month. Yes, you can refi and continue out the interest only, but for some people that might not be normal or they've never seen a loan like that. The world I come from is more installment based, right? Or credit based, like credit line based. So I think there'll be a world where we issue, lines of credit collateralized by your crypto or something along those lines. Which also kind of helps with the, expansion of our total kind of addressable market of who's going to get the credit card. Because in the beginning of time for the credit card, it'll definitely be more of a prime type borrower, right? But then as you start to build other products like a collateralized line of credit that people can have access to, right? You can start to, open up the doors to different types of credit profiles, which just allows, more people, more customers to gain access to credit, which is important, right? At rates that make a lot of sense. So, I would say like getting into crypto and getting into digital assets, being able to buy Bitcoin and Ethereum or whatever it may be anywhere in the world, kind of democratizes your ability to own assets. That's one, right? Not everyone owns a house and everyone can buy stocks, but everyone can buy crypto theoretically if you get on the right platform, theoretically, right? Depending on where you are. But then not everybody, if I go to Robinhood today and I have $5,000 of Apple shares, Robinhood is not issuing me a loan backed by my $5,000 of Apple shares. It does not exist. So that is where I think, we're going to start to see a pretty cool, right, additional entrance of, folks who are wanting to use crypto bankable like assets to do things, but can't. And now they will, with our products. So that's exciting to me personally.
No, very, very exciting indeed. So I think it's also important to note, because I sent in a customer service ticket a while ago, that the crypto that you're using for collateral cannot be the crypto that's
Not
earning yield. These are two separate
yeah,
products. So you put in your crypto, use it as collateral. It's not like it's earning 6% and growing over time.
correct.
That's completely segmented, which makes sense.
That'd be a very, very cheap interest rate.
Yeah. Yeah. After I like got the response back, I was like, oh, yeah, that makes sense. But
Yeah,
yeah, I was being
yeah,
greedy. Um,
yeah.
so I'm curious, this crypto that's being used as collateral. So I send in, say, one Bitcoin, which is $50,000, and then you send me $25,000 in dollars to my bank account as a loan. That one Bitcoin, that $50,000, is it just sitting there in a custody account, or are you lending that out and doing something with it?
Sitting there in a custody account, going up or going down. Yeah,
Okay,
appreciating, depreciating. Yep.
easy
Um,
enough. And then
and then
sorry,
it's in an account where we have access to, call it if need be, liquidate if need be, or there's some like margin release type activities. If all of a sudden your LTV goes up to or goes down to 20%, then you can refi, right, and get some
okay, so I can pull out more money. So if Bitcoin, so for
goes
the
up.
the average listener, so this means if that one Bitcoin suddenly goes to $100,000, so it doubles. Well,
Mhm.
if I only have a $25,000 loan, that means my loan to value is only 25% because I have $25,000 in my bank account collateralized by $100,000 worth of Bitcoin. So I can go to you and I say, hey, BlockFi, I've hodled and this thing is on its way to the moon. Give me another $25,000. So I'm at 50% loan to value. And you guys
Correct.
will do that.
That's correct. Yep.
That's awesome. And then
Yeah.
the interest rate is determined. I mean, are you doing pulling in my credit score, or it's just based on
Just the
collateralization?
collateral. Yeah, because we kind of have two options, a 35% collateral or a 50. So a 35% or 50% LTV, your rates are just going to change depending on either one. I think it's nine. I can send you the links over to share with your audience, but
I
it's on our
I
website.
mean, that's easy. It's very easy to calculate. That makes it nice. So
Yeah.
I'd be curious. And then so that's the retail based lending. That was very helpful. So let's round this thing off and talk about credit card, which we're all excited about. How does that work?
Oh man, credit card is exciting stuff. We're actually launching today some additional benefits to the card, which I can talk about in a bit. But
Yeah, I thought you were
um,
going to announce it yesterday. You teased it on your Twitter a couple days ago, saying we'll do
teasing
it
it.
the
Yep.
next day.
Yep.
So I
We
was
needed
looking
that
at
one
it
more day
before.
of
I was like, "Ooh, new
squeezing
features.
out
Let
some
me see."
retweets.
Nothing. So full
Yeah,
disclosure,
here's the part.
my Fold card is in the mail, so it
Oh,
should be
nice.
here any day. So I do have a
Great.
Bitcoin rewards card that has been a long time coming, but
Well,
excited about this one.
I love to hear that. Look, I mean, our card's different than any other card in the space. It's a credit card, right? Which is very important to our user base because our users don't want to spend any of their crypto. That's just an ethos of wealth management. Like, do you want to spend your shares of Tesla? No, nobody wants to do that, right? You don't want to spend your
As
Bitcoin.
yeah,
I would
hashtag
never
adopt.
want to spend, $5 of Tesla shares or any sort of stock that I think is going to go up in the future at Starbucks for a coffee. It's just
Well,
not, it's not
it's
how
all the
I think.
Bitcoin that I spent. I was friends with a crazy Bitcoin bull, and we were in uh like a place like Prague where Bitcoin's actually accepted at a lot of the retailers. There's more ATMs per capita than any other place in the world, which a lot of people don't
Oh,
know.
that's pretty,
But you walk into these cafes and you see Bitcoin accepted here, and you're so excited because you can
yeah,
actually
you're like,
spend it.
I'm
And I'm
gonna,
like, oh my
yeah.
gosh, let's buy coffee with Bitcoin. And he's like, I'm not paying $300 for a cup of coffee. And you're like, yeah, I
Yeah.
mean,
It's
and
the,
now
you don't want to be the
hindsight,
guy who,
I spent a shit ton of money on coffee because Bitcoin was probably at like 4 or 5 thousand bucks when I was buying those coffees every day, thinking it was super cool to spend my
like a
Bitcoin.
40,
But
$50 cup of coffee. It's like, you don't want to be
yeah,
the guy who spent 10,000 Bitcoin on a pizza.
right,
You don't want to be
yeah.
that guy.
Anyways,
But no,
so
look, like
it doesn't spend your Bitcoin, but dive into it because I'm
in
interested
all
in it.
seriousness though, it's, look, we want to preserve that wealth, right? Comes back to the wealth management kind of ethos that we have as a business. And it's a credit card. no different from your Chase Reserve or your Freedom Card, City Double Cash, whatever it is. You apply for the card, you get a credit limit, the card gets issued to you. You have access to the card, chip, Visa backed, Apple Pay, I believe. Don't quote me on that, but it should be supported. And as you spend, you earn 1.5% back in Bitcoin. And that Bitcoin actually is deposited into your BlockFi interest account and it earns interest. Really cool. First reward that earns interest, I think, in the history of rewards. If I've never heard of that before. And it'll be the first first Bitcoin rewards card that exists in the market. We're also going to be launching for BlockFi customers 4 additional benefits that will total, I think up to between $750 and $1,000 in bonus over the 2-year period. And those will be bucketed in, Bitcoin rewards, 1.5 being bumped up to 3.5. We have a stablecoin boost if you hold a certain amount in the account. We have a trading boost. We have a refer a friend boost. All that'll be on our website. You can dive in. There's a video. It's great. But we have a lot of people on this wait list, and we think it's going to be a huge success. We think it's going to drive tremendous amount of, we call them crypto neutral to crypto native adoption. And, we're going to also come out with some pretty cool offers. So, being able to spend at other places like Harry's and Uber Eats and all that and earn Bitcoin back for those purchases on the cards. So I'm really excited. It's been a lot of work. The team has been working really hard on it. But yeah, the hype is real. And the clink factor of the metal card is also real.
I love that. You say nice Chase card. Sapphire, the reserve one is a real thick card, and I do get a little bit of satisfaction. I saw the Apple card the other day. That one is a seriously thick card.
I have the Apple card, actually. That thing is crazy. It's made out of like titanium. I would love to make a titanium card one day. But for now, we're sticking with metal, and then we'll move from there.
I like it. Well, I'm super excited to, I'll link up everything in the show notes, but I'm very excited to see this thing come out. So one thing I didn't touch on any of these actually was fees for retail. So what kind of costs to do these different products is the average user looking at?
Yeah, so on the card, it's a $200 annual fee, but we pay $250 back in Bitcoin if you spend $3K in the first 3 months, which, and then we're also probably going to be paying, as I mentioned earlier, up to $700 to $900 in rewards. So that fee will be covered quickly. On the account side, we do have withdrawal fees, but your first withdrawal is free, which is great. And then we do have trading, fees built into the spread or into the price. We have an origination fee as well, which is associated with taking out a loan. I think it's 2%, which is standard across the board. But other than that, those are our fees. Keep it simple.
Yeah. And then kind of the last question about all of these would be, I mean, systemic risks to the business. Like, so in theory, and I don't think this is even possible, probably everything's possible. It's highly improbable at this point. But if Bitcoin were to go to zero completely, I mean, the fact that, like, what would happen to all of these things that are moving? Do you guys think about that?
Well, let's hope Bitcoin never goes to zero. But look, I mean, as the price of Bitcoin starts to fall, we have automated margin call and liquidation triggers in place. So we would theoretically consistently be liquidating until the point of, where we have this huge drum of cash. And that would be, used to cover any outstanding balances. We also have $300 million or $200 million of equity that would be first loss as well. So, I would hate for that to be the black swan event that ruins the entire crypto industry. I don't think that'll ever happen based on, where some of the downside buying pressure is on the institutional side. But, we would be able to, get out of it without, everyone being in a really bad position.
Yeah,
Um,
it almost
in
feels like a
in
very terrible doomsday sort of scenario if somebody would game this and put enough downside sell pressure on Bitcoin to kind of kick off these mass liquidation events that would
Yeah,
spiral it further down
you just can't,
more
you
quickly.
can't, you can't put enough sell pressure down on, you can't do it when you have Tesla and Square and Michael Saylor and Paul Tudor Jones and
It,
pension
it's
funds in
being
the space
de-risked every day, but I mean, you
every
give
day.
me $10
Can't do it.
trillion, I could probably do it.
Correct. Yeah, correct.
Yeah.
Um, or if like there's like a global blackout and all like our phones and like computers stop working
Yeah.
forever,
Yeah.
that's like apocalypse doomsday, and that's probably not going to happen either.
Yeah.
I will say when the price did drop 50%, I think it was to three in March to $3,400. Our automated liquidation triggers and risk management system actually did not lose a single dollar. Everything worked as planned, and
When you say
it was
did not
actually
lose a single dollar, that means I had my one Bitcoin $25,000 loan and Bitcoin went to whatever it starts liquidating, 20% loan to value. So it went ahead and did that, paid off that $25,000 loan plus a fee or whatever, and
yep.
you guys were made whole, right?
Correct. And
Okay.
like if you had a loan, let's say at 50% LTV, either were able to put more money in, or you just
I
the
just basically
transactions
keep that 25K and you,
transactions done. Yep,
yeah.
transactions done. And so so that was one scenario where we, actually came out of it in a really good shape, because it was, well, not good shape because of what happened, but we were able to enter the market and continue to lend because our risk management system operated the way it was supposed to. And a lot of these companies did not have the balance sheet to be able to lend because they were underwater on a lot of their assets. So we actually gained a tremendous amount of institutional market share in that like 2-quarter period after that March incident. And it's helped, get us where we are today. So resilience is important.
That's awesome. No, it's good to it's good that we had that crazy drawdown where everybody thought the whole world was on fire for a few months. But really to like battle test these things a little bit, because it's not out of the question for the crypto markets to sharply correct by 30-40%, which people forget right now, especially. But yeah. So I'd be curious, like biggest threat to BlockFi as a business. So I know that there's always murmurs of traditional banks entering the space, of Coinbase moving closer to this sort of business model, issuing a credit card, like maybe their borrowing lending gets a little bit more robust. All of these things that like Caitlin Long out in Wyoming is doing. So I'd be curious, like from a business perspective, where do you see kind of the biggest risks happening?
Yeah. I mean, all the competition out there, I'm a huge fan of personally. It just helps with this crypto adoption narrative. And, whether Gemini comes out with an interest account and, Avanti or whatever they're doing out there does, it's all going to be positive for the space because it brings more users in to the ecosystem. From like a like business risk perspective, I mean, we covered financial risk and kind of how we handle that. I think another risk that you got to keep in mind is just regulatory risk. So we're a FinCEN licensed business on the federal level. We have lending licenses in all states that we operate in, and we have money transmitter licenses in all states that we operate in, right? So we are, from a regulatory perspective, completely up to date on everything that need be. I think there might be, if there's instances where, SEC comes out and says Bitcoin's a security, which they have not, and I don't think they will. It's still under the SEC or the CFTC as property. But we'll be positioned well for it because we got our licenses. We're treating this like the financial institution that we are. The other is like security risk, right? Which is like, attacks, hacks, things of that nature. to prevent that, right, we've got a huge security team. Adam Healy's our CISO, comes from back in the CIA, et cetera. And those guys are building out really, really important and solid kind of security metrics from a custodial perspective, from like a kind of front end security perspective, kind of the whole 9 yards, to make sure that that's not a risk that we have to deal with. So I mean, I think, look, like in my position, if those three risks, financial, regulatory, and security, can be kind of de-risked with investment, personnel, process, scale, which all the things we're doing right now. And then we have other entrants into the space that, start to do things that we do. I really think that we can actually outpace and beat everyone. Like, I really think we could get to the size where we're bigger than everyone, like, and we're the winner, or there's three of us or whatever the amount. And there's four big companies that are kind of dominating the entire space. But we'll see. It's going to be a lot of work.
Well, I mean, I'm team crypto, so I love all of the innovation and everything that's happening, and it's all a net positive for the space in general. But I do know that it's probably a bit of a bloodbath between the contenders, and like there's a lot happening, and it's got to be really, really exciting. Last question is like who do you view as your biggest competitor? So actually today, oddly enough, I try to schedule my podcast on like Tuesday and Wednesday. And today I'm interviewing you and Celsius on the same day, which is crazy.
Wonderful.
And
Wonderful.
yeah, so I'd be curious, how you view somebody like Celsius, and then also something like DeFi as a competitor, and how BlockFi fits in and differentiates from these.
Yeah, I mean, look, Celsius, Nexo, like those, like I don't really consider them a competitor in my eyes. We're just different business models. They have their own utility token, right? They operate outside of the US. I don't know kind of what their kind of regulatory regime looks like either. So I just wouldn't classify us as the same business model as them really at all. I definitely think like some of the bigger players out there, could create products that would compete with us. But again, I'm open to that. Competition spurs innovation. You might start to see like banks figure out or try to get familiarized with the space. You're going to, like, you saw kind of MasterCard and Visa moving into it. So like, there might be a world where some of these bigger companies start to take action. Square comes out with, Cash App, you can buy Bitcoin, and PayPal, and, some of the major kind of fintechs. I would keep my eye on them more than I would keep my eye on kind of the crypto native incumbents. Someone like a PayPal, doing something a little bit more, deep within their suite of products. That'd be something I'd be a little bit more concerned about. But look, that being said, like, we built a really nice moat. We've got great defensibility all across the org. I think we've built the business in a sustainable function, and built it for like really massive scale, which is important. And yeah, from like a raise perspective, there'll be some news on new financing rounds and things of that nature, hopefully pretty soon. And then the world will understand how big we're going to be able to be.
Oh yeah, and I purposely left a lot of those rumors out of this discussion. I know you can't talk about them anyways.
Yeah, not quite yet.
Yeah, I know you'd like to, but Shayne, it's been lovely chatting. I think this has been incredibly educational and helpful, walking through the different risks, the different benefits, and kind of the value prop that BlockFi is offering. So just to close it off, where would you like to send my listeners? Where can they find out more about you, about BlockFi? Where would you like to send them?
Yeah, I mean, look, our website personally has a ton of good information. I can also, share a link with you, Ben. And we're doing right now for partners like Ben, anyone in their audience that sign up through the link can earn up to $250 in free Bitcoin, which is an awesome perk. Our customers love it. Other than that, YouTube, our Twitter, the whole 9 yards. You probably see us all over the place. We try to do a good job doing that, but also me LinkedIn and my email. If anybody has questions, feel free to ping me directly.
Awesome. And I'll link all of those things in the show notes, and definitely the BlockFi partner program. I wouldn't put that in the show notes if I didn't feel strongly about it. And $250 in Bitcoin today might be worth, a lot more one day. You never know. Or a lot less. Either way, it's $250 today.
Yeah, exactly.
Shayne, great to meet you. Thanks for coming on. Really appreciate it. There you have it. Thank you for listening. I really appreciate your support. Show notes, transcript, links, and more can be found on our website at altassetallocation.com. If you'd be so kind, please share this with anyone you think might be interested or get some value from this conversation. If you have any questions or comments, please reach out. I'm always happy to hear them. Lastly, if you're on YouTube, please like the video or subscribe to the channel. If you're listening to the audio version of this, please subscribe to the podcast and or leave a review. This really helps more people find the podcast, and I really appreciate it. Thanks again, and hope you have a fantastic day. Happy investing.